Good morning. Welcome to the Brew. I'm your host, Lex, and today we have a special guest. His name, Angelo Ciavarella. He's a lecturer at the University of Greenwich in London. We are going to talk about the CPI, which just came out, and some other things that go along with it. So let's get ready for our talk with Angelo on the opening bell. Hello, Angelo. How are you?
Hello there. Very well. Thank you. Yourself?
I'm doing great. Thanks for coming on today. We're excited to have you. This is going to be awesome. One thing we like to do is introduce yourself. Tell us a little bit about yourself. Let the audience know who you are and what you do. And, we'll get into it. How's that sound?
Sure. Yeah, great. I start day trading December 1999, so like a prehistoric age ago. And then I've been trading ever since. So it's 25 years almost. Mm-hmm. I've been in the trading world. At the time, there were also some trading competition. I won even a Porsche in a real trading competition. It was 4 months. Started off with 25K, could trade only blue chip stocks. Uh-huh. And I made roughly a little bit less than 1,000% with the real money. So I made up say less than 250,000. I won a Porsche. 6 months later, 6 months later, yeah. I crashed it in an accident. Geez. So that's why and then actually I was in the States for a little while. Yeah. At Johns Hopkins. I did my master's degree at Johns Hopkins University in DC. Mm-hmm. And after that, I moved to the city of London, where I've been working for buy side and sell side for like 15 years. Mm-hmm. And I've been teaching now 6 years in a row at University of Greenwich, trading in financial markets.
Awesome. The Porsche story is unbelievable. You won a Porsche and you crashed it.
Yeah, I won this Porsche. I'm 2003, talking 21 years ago. Yeah, and I'm lucky that I'm in London. I don't have any car. I live in the Netherlands, so I don't need a car in London. So that's good.
Well, that's great. Awesome. Okay. So would you consider yourself sort of an economist or not so much? How do you describe?
Not so much. Look, I've been trading for 24 years. Okay. I try to understand the macro behind the scenes, what's going on in the markets. But look, nowadays, it's very complicated to find any economic justifications for, Wall Street, record high, gold, record high, Bitcoin, record high, It's complicated, right? To find any kind of it's like something doesn't add up here, does it?
Yeah, exactly. All right, let's dive into this a little bit. So, first of all, the CPI that was published, fairly shortly ago. What did you make out of that? And I want to learn a little bit more about CPI and what it's telling us. So, can you go into that a little bit first?
Well, CPI just got out what was that? Like a little bit more than an hour ago. Now, and basically saw number the CPI was 3.2, slightly revised up compared to 3.1. There were the expectations. Again, inflation looks a bit sticky, but we knew that the last mile from 2 to 2%, from 3 to 2%, would have been complicated. It is complicated, especially now, considering the economy, it looks like pretty solid in the States. And the only market is really reflecting this CPI reading is the bond market. The yields jumped. The 10-year Treasury note before the data was 4.08. Now it's trading at 4.15. Oh, wow. So it's like decent jump. Whereas it didn't affect the equity markets at all. Well, equity markets, it looks like they're pretty naive. They don't really care now about any economic data, whether it's good or bad. They keep hitting new high. Just think about numbers. S&P hit 17 days record high in 2024 out of 45 days of trading, give or take. So it's
What do you make of this? What's going on here? I mean, it doesn't make sense to me. First of all, as an American looking at these dumb markets every day, I keep saying impossible that we keep going up every single day like this. But yet it keeps running my short position, you know where. I'm mystified by this. What's happening here, do you think? Anything?
Look, it's a very good question. It reminds me in 2000. I started off December 1999, so I didn't know anything about markets at the time. And every day markets were up by 2, 3%, 4%, down by 0.4, and then again up by 2% without any news really. Markets were just, we was keep climbing up every single day without any reasons. Well, at the time was kind of really a bubble. This time I wouldn't say it's such a bubble, but the move. Like, look, let's watch the markets. The S&P closed positive 16 out of 18 weeks. Look, it's kind of dates back in last time was 1964. I was bored. So it's really uncommon. Let's say at least that. Let's give it that. It's very uncommon, this kind of price movements.
So do you feel then, having said all that, and it is absolutely true, are we going to pay the piper, as we say? Is there going to become a day of reckoning when the market just absolutely falls out of bed here, or is it going to be more gradual? Any thoughts there? I know I'm not holding you to that, obviously, but what do you think?
Well, that's difficult to say. I was just looking at today's the 12th March, and I might be wrong, but in the peak of the bull market in 2001, anything between 10th to the 12th of March, I'm not saying it's going to happen again, because this market looks to be more solid than the one in 2000. 2000 was completely out of mind. Well, it's got some good fundamentals. The problem is the prices cannot keep climbing every day. This is really, they are defying gravity here. There's going to be probably a reckoning. You know what? And this is psychology here that plays a big role, right?
Sure.
Every day investors buy because they believe that next day it's going to be somebody else going to buy a higher price. So this is the only logic here. There's no numbers that can support this daily climbing.
Yeah, I agree. It's crazy. So stocks are at record highs, right? As you said, gold also is at a record high. What's going on? Don't they work contrary to one another generally?
Again, and that's why the economic part kicks in.
Right.
You usually at EC01 you teach that gold is a safe haven. When there is geopolitical risk or the perception it gets bigger, you're gonna fly into gold. Or, and this many people don't probably think about that, gold is great during deflation periods. Think about 2020, gold reached all record high because when do you invest? Bonds were paying 0.5%.
Sure.
Gold, all stocks were in disarray because of pandemic. You're gonna buy gold, and that makes sense, right? But nowadays, with a risk-on mood so strong, why would you buy gold? I mean, let's face it, the 10-year bond pays 4.1%. Why should I buy a non-yielding asset like gold? Now, so economists are scrambled to find a justification. Now, you hear people talking about currency debasement, right? Paper money is not worth it. That's a cool thing, yeah. But you realize today. Now, what about a year ago, year and a half when inflation was 9%? At the time, you didn't talk about currency debasement. So I think there are two forces at play here. One is that central banks over worldwide are buying into gold. That's probably true. But at the same time, also I don't see any weakness in the US dollar that is could help fuel this rally of gold. Last time the gold rally like eight days positive close was like 20 years ago. So it's something uncommon here. That's why something doesn't add up. How can gold reach record high together with stocks and bonds paying 4.1%? Something really doesn't add up from a macro scenario.
Right. That's what I feel the same way. That's very interesting. Is there any, it's an election year, a big election year in the States, right? Anything there with the election that we see the markets how the markets would behave in an election year? Are they typically, very, very positively bullish or bearish or neither? Do you have any thoughts on that with an election year coming?
Usually, when there are elections in the US, volatility starts increasing by the time you get into the election kind of territory. So volatility definitely is gonna probably climb up. Second, I guess during the election here, markets are to be mixed. Here, I guess markets wanna just focus on one thing. What about taxes? Because people don't really realize, but if you look in the last 40 years, taxes have been cut for corporates, and it's been a sliding territory ever since. And this gives a big, upside to the profits, and therefore to the price of S&P 500. Look, now let's talk about the American exceptionalism. American exceptionalism, it says that since 1926, we're talking 100 years, pretty long time, U.S. delivered S&P around slightly more than 10% on a yearly basis, right? After inflation.
Sure.
But the last 10 to 15 years have been abnormal, even for the US itself. I mean, the returns in the last 10, 15 years, they were like way above the average for the S&P 500. Now, the question is, are they going to last? I'm betting the next 5 to 10 years for the long run. No. I mean, nowadays, there's the hype for the AI. And before there was the EV, and then there was the Fed buying any assets. What's next? I think at some point there was going to be some reckoning, some important corrections in the market.
Yeah. You know what I noticed? I've been trading a long time as well, and every time I thought it looked like we were going to roll over in America, the American markets, some piece of technology came out that sort of bolstered the market and said, oh my God, now all of a sudden we have, a new technology concept that is just earth shattering, and the market just keeps rolling, right? If you like something like the NASDAQ, I mean, there's, the Magnificent Seven kind of rules the roost there, I think, in terms of the upward momentum. Those stocks are powerful, right? They're kind of dragging everything up. So, and you mentioned AI. That's the new talk. Everyone's asking me questions about AI. What do you think about it relative to trading? Blah, blah, blah. Maybe that's the next piece of technology that's going to pull this disaster out of itself. I don't know.
Look, up to the end of last year, there were the Magnificent Seven. Nowadays, there are the Magnificent Four.
That's right.
The question is, if somebody would ask you the 1st of January, after 2 months, you're going to see Apple losing 10%, Tesla losing more than 25%, Google in negative territory. Would you bet the NASDAQ would be positive? Not possible, right? And yet, now there is one driver, NVIDIA. NVIDIA moves gained like $260 billion in market capitalization after the release of the earnings, which were good. Let me give it that. But the point is that with these numbers, we are discounting NVIDIA growing on 30% on an annual basis for the next 10 years. Somebody is, comparing NVIDIA to Cisco in 2000. Cisco was pretty much very similar price. People were expecting a 20-25% kind of increase in revenue and profits for 10 years. It didn't happen. NVIDIA is not Cisco. And I give it that, but how much is already priced into the market for NVIDIA? Because this is the only driver nowadays in the US market. Now there's a little bit of breadth of the market. So not only the tech, also other sectors are moving in. Real estate, even utilities, they were really completely abandoned last year. Real estate and utilities, and also financials is doing good, other than IT and communication services, and also the pharmaceutical healthcare finally is awakening after like a long time being kind of left out.
Yeah. Okay. Interesting. So also at record highs, we haven't talked about this, Bitcoin.
Yeah.
My goodness. I've been short the whole way, just so we're clear. It's
all right, cool.
I've been short. I started in the business in 87. I've been delta short since 87. I still managed to make money, but I am just one of those scary bear types who I'm so afraid of the downside. I don't know. I shouldn't be like that. But anyway, Bitcoin. What do you think about Bitcoin? That's also at a record high. What a rebound that's had, huh?
Wow, it was since he brought the 30,000 this time, they was like 30,000, 70,000, one shot, boom.
Yeah.
nobody really saw this coming. The reality is now Bitcoin is becoming, a mass product, through the ETFs. And that's why now it's like an institutional people can buy into the Bitcoin easily. So this is one thing. Second, there are all these people still believe that Bitcoin is going to change your life. It is, let's face it, it's good stuff. But how can you value anything like that? There are no possible, there are different systems to evaluate bond market, equity markets.
Sure.
For the cryptos. So just you trade the momentum, right? Momentum is there. And when something breaks new regular high, usually for the inertia, the momentum, we should keep, rolling. And probably like you, I was born, from a trading perspective in 2000, for 2 years of negative returns. And then I'm scared in buying anything because every time I was losing like 5%, that's when I was pressing buy button. But nowadays there's no sell button anymore. Kind of only the buy, so they cannot sell anymore. So they keep buying any asset out there.
Yeah,
that is really weird. Not even 2000 was like that.
Yeah. So, are you a big fan of Bitcoin though? Or do you like it? You think it's going to be a new currency of sorts globally?
No, look, I'm to be naive about Bitcoin. I don't think Bitcoin is a currency per se. Bitcoin is an asset.
Okay.
No, imagine not even the currency in Zambia could be so volatile, right? From 30,000 to 70,000. So it cannot be really a means of exchange. Sure. It's more like an asset, like gold, right? I was going to use the Jay Powers word when he said that Bitcoin looks like more like an asset, like gold, rather than a currency. And I completely agree with this view. So it's an asset to diversify your portfolio. Now imagine if big guys are going to put into 3-4%, whatever they have under management of the Bitcoin. Probably the next target ahead is 90,000. But now it's easy. Everybody goes out with a number: 90,000, 200,000, 250. Nobody knows, right? It's difficult to say. It's very driven by the momentum nowadays.
Right. Okay. So what's next? So I know we could talk about recession. What about when we start cutting rates again? Or are we going to cut rates again? What happens next here for us, do you think?
Well, look, the Fed funds, they price in the first cut in June. Before the CPI, 60% were, kind of betting on a first cut in June. Now it's 56 after the inflation got a little bit higher than expected. Powell said before Congress last week, then the Fed is ready to cut the interest rate. There's only one of the big guys there that he said that he believes the Fed might even hike one more. Or in Summers, there was the former U.S. Treasury head during the previous administration. Look, the reality is that as long as inflation is under control, I don't believe they're going to increase anymore. But if the energy prices that are very depressed, natural gas hit a 25-year low like 2 weeks ago. Oil cannot break $80. So if energy prices are going to stay low, I don't believe inflation is going to go anywhere. But if there's going to be any other possible, crisis from the energy side, then I would see inflation, could climb to 3.5, 3.6, and that's going to be a problem for the Fed. But everything is inflation related.
Sure. So are you in the recession camp or no? Not really.
I was. Believe me, I was. I'm still in the recession camp. Interesting enough, the Wall Street Journal yesterday reported Jim Dimon and Ray Dalio, both of them, they were big kind of, let's say, supporters of recession last year. It didn't happen. So everybody probably understands. Now, after the pandemic, things are like slightly different, right? There is a lot of cash out there, so people underestimated what was there. But look, it looks to me that if the U.S. economy is going to keep rising with a 5.5% interest rate, even in H2 2024, I'll be surprised, to be honest. This time will be much more surprising in 2023.
Sure. Yeah. I'm amazed. So first of all, I never look at the price of groceries. First, I go to the grocery store every day. Never look at the price of groceries until this inflationary period happened. And it got worse. because all of a sudden I'm looking at my grocery bill like, how is it possible that I spent that much money on what I have in my grocery bag? Which, what gets me to the point of how has this market been so resilient? Because it's affected the everyday American, this inflation. And yet I go to restaurants, I go to parks, I go here, I go to airports a lot. It is packed with people. They are spending like they've won the lottery. And I just don't, where did this money come from? Is it the helicopter fly in and drop it all? It's amazing. It's beyond belief, this as resilient as it's been.
You know what's really striking here is that, usually when globally speaking, all the major economies are in the upside, and you can kind of get that, But nowadays, China is in really bad shape. And China is one of the major partners of all the other economies, let's face it, whether you like it or not. Sure. And Chinese devaluation is basically in pretty bad shape. And Europe is okay. It's not great as usual. It's like, kind of stalling as usual. And that looks like, man, and the real question is, how is that possible? The job market is so resilient, man. Yeah. The unemployment rate hit 3.9%, highest in the last 2 years. Still, we're talking below 4%. Like just full employment out there. My guess is that as soon as the unemployment rate is gonna ticking higher, then we don't gonna see all these people going out and spending money. Because when you don't have a job, then there's real problems are gonna kick in.
Yeah, I agree with that. I think that's right. So does Angelo have a big position? You're going into the options market? What are you doing? Buying put spreads, selling call spreads?
Yeah, something like that. Some put spreads. Yeah, still look, I believe that the markets might have another leg up. I don't believe it's gonna last. At least it's not gonna last without any possible correction for the next few months. So I would cover like I got like many stocks now, and I start covering my position already like a few weeks ago. I didn't see this last leg of the S&P, but in Europe is ridiculous, man. The DAX, the biggest index in Europe, is climbing up every day, and they have like a bunch of companies that don't innovate. Come on, let's face it.
Yeah,
at least you have Grand Nasdaq. What we have in Europe.
Right. Yeah. It is something else. I keep shaking my head every time I look at it, and I tease some of our our staff. I'm like, if the market opens down any given day, I said, don't worry, it'll be up by the end of the day.
You wouldn't believe it, right? Would you? As soon as they see red, they start buying people. Right. I said they don't like the red color anymore. Market is to be black. Red is not a color. Red is an American.
Green only.
Green only. That's it. Yeah. Unbelievable.
All right. Good. Anything else before we wrap up here, Angelo? What else can we think about before we close her down?
Look, one thing that I think is important to underline, bond and equity markets, they moved in tandem for the last 2 years. And now this correlation broke up abruptly since the beginning of 2024. Now the question is, are they going to go back and in like the 60-40 portfolio are going to work again? Because 2022 was the worst 60-40 portfolio for the last 20 years. Right. Nowadays is because it was inflation so high. Nowadays, I'm just wondering whether buying bonds today, is it the right choice in case of recession? I would say, I wouldn't mind buying some bonds in order to protect myself for possible recession. If there is a recession, guys, the table is gonna turn completely, and then people are gonna fly into bonds and forget stocks only if there is a recession. Otherwise, I don't see this happening anytime soon.
What kind of 10-year yield do you need to take everything out of the stock market and just dump it into bonds? Because it's so high, it just makes sense. Like 8%, somewhere in that ballpark?
I think anything above 5% would lure people in. I don't see how it's not impossible that you don't buy 10-year bond with paying you 5% after like 10 years of paying zero. Like
it's crazy, right?
It's crazy. Doesn't make any sense, does it?
No. Okay, good. Okay, Angelo, great. Thanks for coming on. This is really interesting. And I would tell you that, in our options world, we don't talk a lot about macroeconomics so much.
Right.
Where I came from, I was a market maker. So we had no idea which direction was up or down.
Yeah, true.
It didn't even matter to us because we just traded, bid to offer. So this is always refreshing to hear someone's perspective on, the market at large and stocks and golds and Bitcoin and all that kind of great stuff. So we appreciate you coming on.
Thank you so much for having me here. Wish you great. Thank you so much.
Yeah, we'll do it again. We'll grab Alex next time. We'll have another one of these. How's that sound?
Of course, anytime. Thank you.
All right. That's all good. So we'll talk afterwards, and thanks for coming on.
Thanks.
That's a wrap.
All opinions expressed by Trader Hub contributors are solely the contributors' opinions and do not reflect the opinions of Trader nor its affiliates and or subsidiaries. You should not treat any opinion expressed by Hub contributors as a specific inducement to make a particular investment or to follow a particular strategy, but only as an expression of their opinion. The contributors' opinions are based on their own personal research, but neither Trader nor its affiliates and or subsidiaries warrants its completeness or accuracy, and it should not be relied upon as such. Any trades or positions discussed or referred to by contributors may or may not be actual live trades or positions. Such information is not intended to be financial or investment advice. Trader Inc. is the parent company of Trader Brokerage Inc. Trader Brokerage Inc. and Trader Inc. are separate entities with their own products and services. Securities products and services are offered through Trader Brokerage Inc. Trader Brokerage Inc. is an independent subsidiary of Trader Inc. All rights reserved. Member FINRA SIPC.